As of today, December 13th, 2025, the combined assets under management for U.S. spot XRP ETFs have officially surged past the $1 billion mark, with 6 funds now live and collectively locking up over 512 million XRP tokens in regulated custody, marking one of the fastest institutional adoption stories in crypto history since the Bitcoin ETF launches. This milestone comes just weeks after the first products hit the market, led by pioneers like Canary Capital's XRPC, which debuted on November 13th with record day one flows, followed swiftly by Bitwise on November 20th, Grayscale, and Franklin Templeton in late November, and 21 shares joining the fray on December 1st under the ticker TOXR, all benefiting from the streamlined SEC approvals post the August 2025 Ripple settlement that finally clarified XRP's non-security status for secondary sales. But here's the question burning in every investor's mind. How did these XRP ETFs rack up over $1 billion in AUM in under a month when Ethereum took 95 days to hit similar early milestones? The answer lies in pin-up demand from traditional institutions who've been waiting years for a compliant way to gain exposure, unleashing a relentless streak of inflows, 15 to 18 consecutive positive days with no single outflow session, averaging 12 to 15 million daily since mid-November, outpacing even Solana's recent launches and putting XRP second only to Bitcoin in weekly crypto fund inflows at times. We saw peaks like 67 million in a single day back on December 4th, pushing totals from 910 million to the billion plus we celebrate today, with Grayscale's GXRP and Franklin's EZRP leading charges alongside Bitwise low-fee offering that's already waived costs on the first 500 million to attract more volume. Now, you're probably wondering if this torrent of smart money will finally lift XRP's price out of its current consolidation around $2.03, down slightly today, but holding firm above the key $2 psychological support despite broader market jitters. Well, the mechanics are fascinating because these ETFs are quietly removing supply from circulation. Every creation basket means authorized participants buy XRP on the open market and hand it over to custodians like Coinbase or BitGo, effectively tightening the float by about 500 million tokens already, which represents nearly 1% of circulating supply, a dynamic that analysts say could amplify upside as demand from Ripple's real-world utilities, like cross-border payments and the new RLUSD stablecoin launched this year, starts to compound. Think about it. Ripple CEO Brad Garlinghouse just hailed this as a billion-dollar win last week, pointing out how off-chain holders, think pension funds and RIAs, are finally piling in without touching wallets, and with predictions from outlets like the Motley Fool calling for 5 billion in AUM soon, potentially locking 2 billion tokens and reducing effective supply by 2%, we could see structural tailwinds pushing toward $5 or higher in 2026, especially if Fed rate cuts continue into the new year and risk-on sentiment returns. But let's dive deeper into the numbers that make this so compelling. As of December 8th, we had a 15-day inflow streak nearing the billion, with 244 million pouring in that week alone, making XRP funds the hottest category behind Bitcoin's 352 million, while Ethereum lagged with just 39 million, showing a clear rotation into utility-focused alts post the regulatory green light. Canary Capital's Stephen McClurg noted this demand was building for years, suppressed by the old SEC stance. But now with the August settlement's 125 million fine fully behind us and appeals dropped, institutions are voting with their dollars. Franklin Templeton drew 62 million on launch day, Grayscale 67, and the combined debut volumes smashed records for altcoin ETFs. If you're nodding along thinking this institutional wave is just getting started and could mirror Bitcoin's post-ETF surge, but with XRP's unique payment utility adding extra fuel, then hit that like button right now to let us know, and subscribe with notifications on because we're tracking these flows daily to catch the next breakout signal. Shifting to the price action, XRP's holding steady near $2 today after testing 198 lows earlier in the week, but on-chain velocity hit 2025 peaks on December 2nd, signaling rising liquidity just as ETFs absorb sell pressure. Remember, without these funds, that derivatives dumping we've seen in perpetuals might have driven prices much lower, so they're acting as a buffer while accumulation builds quietly. Historical parallels are striking. Bitcoin dipped after its January 2024 ETFs before tripling, Ethereum corrected 40% post-launch, then rallied 130, and XRP's current pullback from July's 365 high mirrors those patterns, with analysts like those at A-Invest projecting a 400% move to $10 by 2026 if ETF inflows hit 5 billion and supply tightens further. We also can't ignore Ripple's ecosystem momentum. HexTrust just announced wrapped XRP for DeFi on December 12th. The OCC gave conditional trust bank nods pushing Ripple toward national banking status, and partnerships in Japan and Singapore are expanding RLUSD usage, all layering real utility on top of the speculative ETF bid. For practical strategy, if we're building positions here, consider diversifying via the ETFs themselves for regulated exposure. Bitwise 0.34% fee or Franklin's ultra-low 19 basis points make them attractive long-term holds, or spot on exchanges if you're comfortable with volatility. But always size for the $2 support break, which could test 180, while upside targets align at $2.30 near-term and $3 on a clean breakout. Risk management is key. With MinFave's engagement high on X posts about these inflows, sentiment's turning, but macro shocks like delayed rate cuts could trigger outflows. So trail stops and watch weekly flows from sources like Value. Looking ahead, if we sustain this pace, 60 to 70 million daily peaks aren't uncommon now. The next billion could arrive by early 2026, sequestering even more tokens and setting up for amplified gains as tokenized assets on XRPL grow. With Evernorth's XRP Treasury commitments and Ripple Prime's tripled activity underscoring institutional conviction. This isn't just another ETF story. It's the bridge traditional finance has been building toward crypto utility plays. And with XRP leading the altcoin charge and inflows despite price consolidation, we're witnessing the early stages of a potential paradigm shift where payments infrastructure meets Wall Street capital. Stay tuned as we monitor for the next catalyst, whether it's more launches, bigger weekly numbers, or a price reclaim of 250. And remember, in markets like this, patience with conviction pays off as the smart money continues to stack.